Vanakkam, Namaskara and Namaskaram, and welcome to this session of the direct taxation. And yes guys, in this particular chapter we had studied certain residuary clauses of various sections which are remaining to be answered in our rest of the chapter. So this is a chapter which talks about certain miscellaneous things. The topic which we are going to start today is the topic on AOP and BOI, Association of Persons, Body of Individuals. This is a specific type of person as per the Income Tax Act, and yes, we had studied the definition of person in our basic concepts chapter guys, whereby we have seen that there are various other forms of organizations which are doing work apart from HUF, company, individual, which are conglomerating with each other, which are combining with each other, and which are actually forming out a cartel kind of a thing, a joint venture kind of thing, and they're working on their own without giving specific titles like a partnership firm. It's not a partnership firm, it is even not a company, it is not an HUF, it is nothing but the cartel has to be taxed somewhere. So to tax that particular cartel, to tax that particular joint venture, two new terms have been defined in the Act. The terms are AOP and BOI, Association of Persons and Body of Individuals. Now, just to give you a recapitulation, revision of our earlier concepts, guys, body of individual means where different individuals work together for a common goal. So wherever the individual people are combining together for a common goal, that is known as body of individual. Guys, in this particular of a combination, there is no role of any other kind of person like a company, like a HUF, like an artificial juridical person. There's no one else. There's only a gamut of individual who are coming together to perform a particular task or to perform a particular business activity. That is known as body of individuals, where individuals conglomerate, where individuals decide to combine with each other for some common objective. That is known as body of individuals. Then what is association of persons? Association of persons means where apart from individual guys, there are companies and HUFs who are also conglomerating, who are also combining with each other. For example, there might be one individual and one company who are coming together to perform some work. There may be one HUF and one individual who are coming together to perform some work. There might be some HUF and company who are coming together to perform some work. So in this particular association, the association is not only between the individuals, but it may be between any other source of person, any other person who's a valid person under the Income Tax Act. All those can be combined together to make a association of persons. This is an associations of persons. So these association of persons would work together for a common objective. They would earn certain profits and they will divide the profits amongst the members. The members will take the profits, individual profits of their individual shares. The member will take the respective shares of the income which have been earned by the AOP or BOI. Now, guys, as per the Income Tax Act says that the people who are earning income are an integral part of this association of persons. And hence, from an angle of Income Tax Act, both AOP and the people who are constituting part of AOP are one and the same thing. So under the eyes of law, under the eyes of the Income Tax Act, there's no difference between the association of person and the person who are associating with each other. Guys, please remember, proprietorship firm, there's no difference between the proprietorship firm and the proprietor. Whatever income has been accrued to the proprietor, that is taxable in hands of the proprietor. Whatever income has been accrued in the hands of the proprietorship firm, that is taxable in hands of the proprietorship, in the hands of the proprietor. So under eyes of law, there is no distinguishing factor between a proprietor and a proprietorship firm. Similarly guys, in eyes of law, there is no differentiating factor between an association of persons and the persons who are constituting that AOP. There is no difference between these two things. So the transactions which are there between these two people, those transactions are merely transactions with your oneself. So what do you mean by that? I'll explain it to you. So guys, this AOP which is drawn on the board, these are the members of the AOP, and there's an AOP which has been created by these members. Now, of course guys, AOP would be giving some sort of a remuneration, salary, some sort of a interest on capital to these people. and they might be getting some share in profits. Profit share would also be given to these people, you know, to all of them, to the company, to the HUF, to the individuals. So AOP would have given same things to the company. AOP would have given the same things to the individuals as well. So all these people earn some sort of an income from this AOP, and according to the Income Tax Act, there's no difference between AOP and these individuals. So both of them are one and the same thing. That is the concept which is there as per the Income Tax Act. Now, following that particular principle, the first concept is that income of AOP may either be taxed in hands of the AOP or it will be taxed in hands of the members, but not in hands of both of them. So please repeat. Okay, I'll repeat. Income of AOP must be taxed either in hands of the AOP or in hands of the member, but not in both of them hands. So if AOP is earning some profit, that is to be taxable in hands of the AOP itself and not in hands of the members. This is not a case of a company where company is distributing its dividends to the shareholders. So company will be taxable on its own income, and on the dividend income the shareholders will be taxable. This is not that case. It is the case of an association of persons. Association of persons, and the persons constituting that AOP are one and the same thing. So we will either tax income, we will levy income from the profits which are earned by AOP in the AOP's hand, or we will levy tax in the hands of the members who are constituting the AOP. That is the provision which is given under the Income Tax Act 1961. Okay, let us first of all read some opening paragraphs of the AOP, and then guys we are going to move further. So, association of person or body of individuals. Computation of income in case of association of person or body of individual. Now, please read it carefully. Total income of AOP BOI is computed as per the normal provisions of the Act. So what we'll do is we'll compute the normal income of the AOP and BOI as per the normal provisions of the Act, which is PGBP income, section 28 to section 44, which we have already studied. That income is to be taxed as per the normal provisions of AOP BOI. Those same provisions are applicable, with the following exceptions. So certain things are not to be followed in case of AOP BOI. What are those certain things? Let me first get back to my chart. Okay. All right. So guys, there are certain exceptions to this general rule that all the income from AOP BOI should be taxable in hands of the AOP BOI as per the normal provisions of the Act. Now, guys, two things are to be disallowed while computing the income of AOP BOI. What are those two things? Two things are: remuneration to the partners is to be disallowed. Interest on loan or capital which is paid to the partners is to be disallowed. Two things are to be disallowed. Number one, remuneration or salary which is paid to the partners should be disallowed. Number two, interest on loan or capital to the partners should be disallowed. So why should we do that? Why should we disallow salary which is given to the partners? Guys, the reason is very simple. Salary which is given to the partners is nothing but salary which is given to the AOP itself, because AOP and BOI and the partners or the members are one and the same thing. Let me replace this word. This word should be members. This word should be members. Typically, partners is used for partnership firm. Yes, sir. So, the first thing which I am going to disallow is any remuneration which is paid to the partners, any interest on capital which is paid to the partners is disallowed from calculation of computation income of an AOP or BOI. Because guys, the reason is very simple. AOP, BOI and the members are one and the same thing. There's no difference. So in effect, what you are doing, you are deriving income from your own sources, which is AOP, BOI, and putting it in your different pocket. You are not paying it to a third party. Members are your own people. Members are equivalent to AOP, BOI. So no, we are not going to allow deduction with respect to expense which has been given to self. It is just like the salary is given to self. AOP, BOI is giving salary to itself. It is just like that. we are not going to allow it. So first disallowance which is envisaged while computing the taxable income of AOP BOI is remuneration to members, not allowed as a deduction. We will not allow remuneration of members as a deduction. No, we will not allow it, which means remuneration of members is taxable in hands of the company. We are not allowing it as a deduction. It means that remuneration of members, which is an expense for the AOP BOI, it is taxable in hands of the AOP BOI. Yes, sir, it is taxable. It is not an expense. Expense means when you are paying something to a third party. But guys, in this case, members is not a third party. AOP BOI and member are one and the same thing. Second, interest on capital or loan which is paid to the members. Again, it is not allowed as a deduction. Please don't read this word as of now. I'll explain it later on. But interest on capital is again not allowed as a expense to the members. Interest on loan is not allowed as an expense to the members. No guys, it is absolutely not allowed. Again, same fundamental. Capital has been infused by the members, but members and the AOP BOI are one the same thing. So why should we pay interest to the members? Members and AOP BOI are one and the same thing. So, you know, assume that a company is having profits. It is retaining its profit and reinvesting in itself. So should company give dividends to itself because it has retained profits of itself? Should it be done? Answer is no. So members are equivalent to AOP BOI. Therefore, interest on loan or capital given to the members is disallowed as a deduction. Now guys, what do you mean by net interest? Guys, net interest means there may be a situation where the member is drawing interest on its capital and it is giving back the interest on its drawings to the company. So interest can be payable to the member and receivable from the member both at the same time. So member will charge the interest from the AOP BOI on the capital which it has given to the AOP BOI, and member will have to pay interest to AOP BOI on the drawings which it makes from AOP BOI. So interest on drawings is an expenditure for the member. Interest on capital is an income for the member. So if both the situations are there, both the things are there, then the net amount should be disallowed from the computation of income of AOP BOI. So interest on loan and remuneration to member both are to be disallowed while computing the taxable income of AOP BOI. This is the fundamental number 1. Now there are certain exceptions to this rule that interest on loan or capital is to be disallowed. There are certain exceptions, guys. Whenever interest is paid by AOP on behalf of someone else to the member. So when interest is paid by AOP on behalf of someone else to the member, then that interest is allowed as a deduction. I'll give you an example. Mr. X is Karta of HUF. Mr. X is Karta of HUF. Mr. X is also a member of an AOP. Mr. X is a Karta of HUF. Mr. X is also a member of a AOP. Mr. X has created an AOP for which he is a member. Now, HUF has given certain loan to the AOP. HUF has given certain loan to the AOP. HUF has given certain loan to the AOP. Now guys, what this AOP does is, AOP has to pay interest to HUF, right? AOP has to pay interest to HUF, right? Instead of paying interest to HUF, AOP pays interest to Mr. X, who's the Karta, with an instruction that, dear Mr. Karta, please transfer the interest to HUF. Instead of paying interest to HUF, AOP transfers the interest to Mr. X with an instruction that, dear Mr. X, please transfer the interest to HUF. So in this case, interest is paid by AOP to Mr. X on behalf of someone else. In this case, guys, this interest is not paid to a member. Although it is paid to a member, but it does not belong to the member. It is paid to the member on behalf of the HUF. So it will be allowed as a deduction. It will be allowed as a deduction. So the exception is interest paid by AOP on behalf of someone else or in the representative capacity. So similarly, guys, just like Mr. Karta has been given the interest on behalf of HUF, there may be a situation where Mr. X represents a foreign company in India. Mr. X represents a foreign company in India, and the foreign company has given some loan to AOP. Now AOP, instead of repaying loan to the foreign company, or instead of giving interest to the foreign company, gives interest to Mr. X, who's a representative of foreign company in India. Similar case, guys, similar treatment. That particular interest is allowed as a deduction. That interest is allowed as a deduction. So two exceptions are there. The two exceptions are where the interest is paid on behalf of someone else, and where the interest is paid in a representative capacity. In both of these cases, guys, the interest is allowed as a reduction. But otherwise, the general principle is that whenever interest is given to a member, it is not allowed as a reduction in case of AOP and BOI. Okay, let's read. So interest to member. Any interest paid to members either on capital or loan is not allowed as a deduction. However, deduction to whom? Deduction to AOP BOI. However, where interest is paid by AOP BOI to its member as well as interest is received by AOP BOI from its member, then only the net interest so paid is to be disallowed. If there is a receivable as well as payable, just net it off and the net interest is to be disallowed. However, no such adjustment is made where interest is paid to a member and received from another member. So adjustment cannot be made that, you know, there are two members to AOP. So this is an AOP. It has two members, X and Y. So interest is receivable from X. Interest is payable to Y. This netting off is not possible. Only when interest is payable by X and interest is also receivable by X, only then the netting off is possible. So two members cannot net off their interest and claim the balance amount as disallowed. So, however, no such adjustments shall be made when interest is paid to a member and received from another member. So if member changes, netting off is not possible. X received 5,000 as interest from AOP, in which he is a member, and paid 2,000 to such AOP. So X has received 5,000 as AOP, 2,000 is paid to the AOP. So net amount which is receivable is 3,000. Rupees 3,000 being net interest is disallowed in hands of the AOP. Whereas if X paid rupees 8,000 to such AOP, then nothing shall be disallowed in hands of AOP. If X paid a higher amount, 8,000 rupees, then net off will be a negative figure, therefore nothing will be disallowed in that case. If X paid a higher amount, right? Okay, sir, got it. Next is point number 2. Where interest paid by AOP BOI to any member or vice versa on behalf of any other person, then such interest shall be allowed. Wherever the interest is paid by AOP BOI on behalf of any other person, is paid to the member but on behalf of some other person, or according to the representative capacity of some other person, then that interest which is paid to the member is also allowed, because that interest doesn't belong to the member, guys. That interest belongs to someone else. Therefore, it will be allowed. X being Karta of X HUF received interest rupees 5,000 from AOP, in which he is a member, on loan given by his HUF. Then rupees 5,000 is not disallowed in hands of the AOP. Whereas if he received such interest on loan given by him from his own source, then such interest would be disallowed. So X is a Karta who received interest of 5,000 from AOP. Guys, allowed as a reduction in hands of AOP. Allowed as a reduction because Mr. X received this loan on behalf of HUF. This is not Mr. X's interest. This is interest of HUF. X is just receiving it on behalf of the HUF. Therefore, it will be allowed in hands of the AOP. Where interest is paid by AOP BOI to any member who is member in representative capacity or vice versa, then such interest shall be allowed. For example, X, a member of AOP, on behalf of X HUF, received rupees 5,000 as interest on loan provided from its own source. Rupees 5,000 is allowed in hands of AOP. Whereas if he received such interest of HUF, then such interest would be disallowed. So the bottom line is that X, a member of AOP on behalf of X HUF, received this amount. If he received on behalf of someone else, then it will be allowed. allowed in hands of AOP. If he received such interest for HUF, whereas if he received such interest for HUF, then such interest would be disallowed. So guys, this is a very, very interesting case. X is a member of AOP on behalf of X HUF. So guys, the AOP, member of AOP is HUF and not X. Member of AOP is HUF and not X. So X a member of AOP on behalf of X HUF. So member of AOP is HUF. X is not the member of AOP. That is the bottom line over here. So X, a member of AOP on behalf of X HUF, received rupees 5,000 as interest on loan provided from his own source. Now what happens is, X, who's karta of this HUF, from his own source, he provides loan to AOP. X is not a part of AOP, but X's HUF is part of AOP. X provides a loan to AOP on his own personal capacity. Then the interest which is paid by AOP to X is allowed as a deduction. Because X is a representative of HUF, that's it. It's in his representative capacity. It is in his individual capacity that he is providing interest to a loan to AOP. So this interest is definitely allowed. However, if he received such interest for HUF, then interest would be disallowed. However, when AOP gives, so assuming HUF gives loan to AOP and then AOP gives interest to Mr. X, then that will be disallowed. So very clear demarcation, guys. Very, very clear demarcation. Please understand this demarcation well. I am again drawing this chart. HUF. Okay, X is the karta of the HUF. Another member of AOP is Y. Another member of AOP is Y. X is not the member of AOP. X is not the member of AOP. X's HUF is the member of AOP, right? Now, if X gives loan to AOP and AOP repays interest on this loan, this is allowed as a deduction because X is not a member of AOP, therefore allowed as a deduction. Interest is being given to a third party. However, if HUF gives some loan to AOP, HUF gives some loan to AOP, and on that loan interest is paid by AOP to X, then guys that will be disallowed. Why? Why? Because in that case the loan is given by HUF and X is getting the interest on behalf of HUF and HUF is a member. So this loan will be disallowed. This interest will be disallowed. However, if X in his individual capacity, if he is extending some money to AOP, then interest will be allowed because X is a third party. X is not the member of AOP. That is given in this example. Okay, sir. Next one is remuneration to members. Any remuneration, salary, bonus, or by whatever name called, paid to member is not allowed as a reduction. Even when remuneration is paid to member on behalf of any other person, it is disallowed. Now guys, interest on capital, someone else may pay on someone else's behalf. It's an acceptable transaction. But salary, Mr. X is receiving salary on someone else's behalf, not an acceptable transaction. So salary, even if it is given to the partners on someone else's behalf, on a third party's behalf, disallowed as an expenditure. Disallowed as an expenditure. So computation of tax liability. Computation of tax liability of AOP will depend on two things, whether the share of the member is known and whether the share of the member is unknown. Let me explain this particular concept to you using this particular chart. And yes, sir, looks like a very, very complicated chart, but it's not complicated at all. Okay, so we talked about two disallowances which are to be made in the profit computation of income of the AOP and BOI, right? Now the question is that after making those disallowances, what are the rates of taxes which we should use in case of AOP BOI? What are the rates of taxes? So you are saying that AOP BOI and individual are one and the same thing. If they are one and the same thing, then slab rates should be used. Slab rates should be used. But no guys, in all the situations slab rates are not used. Let us see what are the situations. Now there are two situations. Situation number one, when you are aware about the members' share. So what is the split between the members, right? So I again get back to my original chart. Now these are the members. Now if I know their split, that 1:1:1:1:1, the equal split is there, 25% is held by each one of them, then guys I know the share of profits of these particular partners. Guys, in many body of individuals, the share of the partners is not decided beforehand. It is not decided beforehand. They don't decide it. So in case where partners shares, the members share is not known, then the taxability is a little different. And cases where members share is known, the taxability is a little different. So when share of the member is unknown, when share of the member is known, these are the two segments, two sections in which the taxability of the AOP and BOI is to be ascertained. So first let's deal with when share of members is known. When we know which member holds how much share, how much percentage in the AOP BOI, then what will be the taxability in hands of AOP BOI? Guys, in that case we need to see the taxability of the members. If the members do not have any other income apart from AOP BOI income, when the members do not have any other income apart from AOP BOI income, then the income of AOP BOI should be taxed at the slab rate. Considering both members and the AOP BOI one and the same people, and if members do not have any other taxable income, then the slab rate should be used for taxing the AOP BOI also, because I am telling you again and again, AOP BOI and the members are one and the same things. So if the members are not taxable otherwise than AOP BOI share, then slab rate is to be used to tax AOP BOI. But if member have taxable income other than AOP BOI, so members are rich, members are not dependent on this AOP or BOI for their income, they have many other sources of income, okay, and they might be falling under higher category of slab rates. If you see their other income, they are rich people, members are rich people, then guys I will tax AOP BOI also as per a higher tax rate, which is the maximum marginal tax rate. I will tax the AOP BOI at a higher rate, which is the maximum tax rate which is applicable. So now let us see this analysis further. When members' tax rate is lower than or equal to the maximum marginal rate. Now first of all, let me tell you what you mean by the maximum marginal rate. Guys, maximum marginal rate means if any person who's residing in India, who's a domestic player of India, what will be the maximum tax rate which will be applicable to that person? Because this AOP BOI is a Indian concern, right? So in case of an Indian concern, what will be the maximum rate at which it is to be taxed? Be it a company, be it an HUF. The maximum rate is 30% on which this particular organization can be taxed. Surcharge, the maximum amount of surcharge is 37% and 4% of education cess. So the maximum marginal rate comes out to 42.744%. So if your members have taxable income other than AOP BOI income, which means your members are rich, then guys, AOP's income should also be taxed at the rate of maximum marginal rate. And if members' tax rate is even higher than maximum marginal tax rate, so members are super duper rich, not rich, super duper rich. If members are super duper rich, which means they are taxed individually at even a higher rate than this rate. Guys, you are aware that in case of a foreign company, this 30% escalates to 40%. Then if the income is higher, then surcharge, education cess, everything can be added. So if the members are taxed at even a higher rate, if members are taxed at a rate higher than maximum marginal rate, then guys, the members' share in the AOP is to be taxed at a higher rate and the other income is taxable at the maximum marginal rate. So let me explain it a little further to you. Alright, so guys, AOP BOI is earning some income, right? AOP BOI is earning some income. Now AOP BOI suppose has earned income of 1 lakh rupees. Out of this 1 lakh rupees, it decides to distribute it amongst the members, distribute it amongst the members who are there. The income should be distributed. So guys, out of this total income of 1 lakh rupees, there are two members in this AOP BOI, okay, A and B. Okay, there are two members in this AOP BOI, A and B. Okay. Now A is a super rich individual whose income is chargeable to tax even at a higher rate than MMR, which means he's taxable even at a higher rate than 42.744%. Even at a higher rate, he's chargeable to tax. Then guys, the share which is attributed to A, suppose the share which is attributed to A is 40,000 rupees, share which is attributed to B is 60,000 rupees. Then guys, 40,000 rupees will be taxable in hands of the AOPBOI at the higher rate, and 60,000 will be taxable in the hands of the AOPBOI at the maximum marginal rate. So if any of the member has got income which is taxable even more than MMR, then his portion of the income will be taxable at a higher rate in hands of AOPBOI, and if B is supposed taxable at a lower rate than MMR, then B's income will be taxable at MMR in hands of AOPBOI. Sir, you are taxing A's income in hands of AOPBOI, and then you will say that we will again tax income of AOPBOI in hands of members. No guys, I'm not going to say that. That is the beauty of this concept. I'm not going to say that. Once the income is taxable in hands of AOPBOI, the income which is pertaining to distributed to A and B, guys, that income will not be taken into consideration while calculating the income of the individual members if the tax is already paid at MMR or a higher rate. I will not ask you to club that income again in hands of AOPBOI. I will not ask you that. And if I ask you that, if I tax the individual incomes of A and B in their individual hands also, if I do that, then I will be providing you a relief in form of rebate under section 86. A rebate will be given to you. A relief will be given to you, so don't worry. No income will be taxed twice. No income will be taxed twice. Either it will be taxed in the hands of AOPBOI or it will be taxed in the hands of the members. That's it. So don't worry about that. Okay, sir, got it. So let us see this diagram once again. So it says members share. If members have taxable income other than AOPBOI, yes, members have taxable. If members have no taxable income other than AOPBOI, that means they are poor members. They don't have any other income. Their income is then taxable at slab rate, normal slab rate. But if they have income other than AOPBOI income, other taxable income is there, then if members tax rate is less than or equal to MMR, then AOP's income should also be taxed at MMR. If members tax rate is higher than MMR, then the member whose share is taxable at a higher rate, his income will be taxable at a higher rate and other income shall be taxable at MMR. This is the provision where share of members is known. Now where share of member is unknown, we don't know in what profit, in what ratio should the members share their profits, share their income. We are not aware about that. There's no decision in this respect. Then guys, the question of using slab rate doesn't apply, because some members might be rich, some members might be poor. But since split is not there, we will not allow you to use the slab rate. Slab rate is out of question. Slab rate is for members who are poor, who have no other income apart from income from AOPBOI. Slab rate is out of question. Then what will happen is, if members tax rate is less than MMR, then the MMR will be used, and the members tax rate which is more than MMR, then higher rate of tax shall be used for taxing this particular kind of AOPBOI. Simple as that. We are not going to give you credit of slab rate. Slab rate is out of question if the members share is unknown. Because if members share is unknown, then guys, we will not be able to split the AOPBOI income between two members, poor member and rich member. That splitting is not possible. Since splitting is not possible, entire income of AOPBOI should be taxed at the maximum marginal rate. MMR should be paid. Or if the members tax rate is higher than MMR, then higher tax rate should be used for computing the tax rate. Okay, sir, got it. Now let us move back to our notes, guys. It says computation of tax liability. It says when share of member are known, when share of member are unknown. When share of member are known, then guys, these are special rates incomes. Okay, special rates income, which is long term capital gain 10% or 20%, short term capital gain covered under section 111A, it is taxable at 15%. Then casual income is taxable at 30%. So these rate remain as it is for these kind of special income. Okay, I'm now talking about the PGBP income or the normal income, right? Normal income tax rate will depend on the when none of the member has taxable income excluding from AOPBOI, then slab rate is to be used. When none of the member have any other income, so they are poor members. Poor members, then AOPBOI will be taxed at slab rate. When there are rich members, when any member has taxable income, excluding share from AOPBOI, then AOPBOI is taxed at maximum marginal rate. What is maximum marginal rate? Maximum marginal rate is 30% plus 37% plus 4% of cess. When any of the member is charged to tax at a rate higher than maximum marginal rate, when we have super rich members in our AOPBOI, then what will happen is share of that member will be taxed at the higher rate, and the balance income will be taxed at the maximum marginal rate. Maximum marginal rate means rate of income tax including surcharge, education cess applicable in relation to highest slab of income in case of individual as AOP, as the case may be BOI, as specified in the Finance Act for the relevant year. That is the maximum marginal tax. Now the second aspect is when the share of the member is unknown. Guys, in that case the specific income remains the same. There's no change in the tax rates of the specific income. Specific income remains the same, but general income, other income, when none of the member has taxable income excluding share from AOPBOI, when there are all poor members, guys, even if they are poor members, we will not allow slab rates. We will only tax at maximum margin rate. Why? Because share is unknown. There's a mixture between poor and non-poor members. There's a mixture over there. So when share is unknown, we are not going to allow you slab rates. We are going to tax AOPBOI at maximum marginal rate. When any member has taxable income excluding share from AOPBOI, again taxable at marginal rate. When any of the member is charged to tax at a rate higher than the maximum marginal rate, when the income is taxed at a rate which is higher than maximum marginal rate, then at such higher rate your income shall be taxed. At a higher rate, which is even more higher than maximum marginal rate, at that rate AOPBOI should be taxed. The individual share of members of AOP or BOI shall be deemed to be indeterminate or unknown if such shares are indeterminate or unknown on the date of formation of such AOP, BOI, or at any time thereafter. So you know what can happen is AOP, BOI, when it was formed, at that point in time the shares were unknown. Or there can be another situation where when AOP BOI was created, then shares were known, but subsequently the share of both the members were unknown because the original sharing ratio was depleted. In either of the two cases, it will be treated as unknown share. We don't know what is the share. Case number one, when share was unknown since the beginning of the AOP BOI was formed. Number two, when the share is unknown not from the beginning but from the middle, then also we'll consider it as unknown share. Then computation of members share, where it is unknown. Computation of members share. Income of AOP BOI shall be shared by the members in the following manner: to the extent of interest salary given to the member, actual interest salary of such member and the balance income should be shared in agreed ratio. This is the income which is to be taxable in hands of the members, and I have committed to you, I have promised that double taxation will not happen. Which means if we have disallowed interest salary in hands of the AOP, then we have taxed this AOP, salary and interest in hands of AOP, then we will not tax the same income in hands of the members. We will not do that. Then sir, why have you written this? I will tell you why I have written this when we'll come to the practical aspect of it. Right? Okay, sir. Any interest paid by a member or capital borrowed by him for purposes of investment in a AOP BOI shall, while computing his share chargeable under the head PGBP in respect of his share in the income of AOP BOI, be deducted from his share. So any kind of salary or any kind of interest which is paid by a member to the AOP BOI, that shall be deducted while computing the profit share, right? Because that is salary that is to be given on an actual basis, and the balance income is to be given on agreed ratio, the split between the incomes. That is the formula. Share of member in the income or loss of AOP BOI shall be apportioned under various heads of income in the same manner in which income or loss of AOP/BOI has been determined under each head of income. So whatever is the nature of income which remains in hands of the AOP/BOI, same should be the nature of income in hands of the member. So if AOP/BOI is earning short-term capital gain, then it becomes short-term capital gain in hands of the member also. If AOP/BOI is earning PGBP, then it becomes PGBP in hands of the member also. There will be parity. Where any deduction under chapter 6A is allowed to AOP/BOI, then the deduction shall not be allowed to the member. Okay, so only one person can claim the deduction. Both people cannot claim the deduction because both people are one and the same people. When a member's share is unknown, then guys, the income of AOP/BOI shall not be included in total income of member. Then tax shall be paid by AOP/BOI at the higher rates, maximum marginal rate, or the rate at which the member is paying tax. So it is already being paid by AOP/BOI. So members will not be subject to tax on such income where the share of the member is unknown, right? So computation of income and tax liability of the member. So how will we compute the tax liability of the member? When AOP/BOI is not taxable, when income of AOP is not taxable, share of AOP is included in income of member and tax is calculated usually. So you will include that particular income in hands of the member, and then guys, rebate. There's no need of rebate because in AOP's hand income is not taxable. In member's hand income it's taxable. There's no need of rebate because there's no double deduction, double taxation. Wherever there will be double taxation, their rebate under 86 will come into play. Okay, sir. Next, when income of AOP is taxable at individual rates and share of AOP is also included in income of member, then 86 is available because now there's double taxation. Same income being taxed in hands of AOP/BOI, same income being taxed in hands of member, section 86 will arise double taxation. We will not allow double taxation. Next, when income of AOP is taxable at maximum marginal rate of tax, share of AOP is not included in the total income of the member, so no question of double taxation arise. So I'll quickly, before coming to the practical questions, guys, I'll quickly give you a snapshot of what we are discussing in this particular chart because you might be a little confused. Okay, just listen to me carefully. All right. So AOP is paying salary to the member. How much, sir? 10,000 rupees is the salary which AOP is paying to the member. Now you are saying we will not allow this salary in hands of the AOP/BOI as a deduction, which means you are claiming that this income, this particular expense is not deductible in hands of AOP/BOI. So AOP/BOI is paying taxes at a higher income, which includes the member's salary also. Absolutely yes. And on the other hand, you are saying that share from AOP/BOI, which is salary, is taxable in the income of the member. So member is paying taxes on this particular salary. So on the one hand, AOP has paid higher tax because salary has not been provided as a deduction. AOP is paying a higher tax. On the other hand, member is also paying tax on this salary. So there's double taxation in this respect. Ideally, what should have been the case? If you have disallowed this expense in hands of AOP because it is an expense for AOP, it is an income of the member. So in AOP's hand, if you have disallowed this expense, then guys, ideally you shouldn't have taxed in hands of the member. Since it is not a salary in case of AOP/BOI, how can it be a salary in case of member? You please have a parity between the two because AOP/BOI and member are one and the same thing. So if AOP/BOI is paying salary to member, not allowed in hands of AOP but taxable in hands of the member, then section 86 rebate will come into play, and whatever taxes member has paid on this salary income, that will be allowed as a deduction in hands of the member. Whatever salary member has paid on this salary income, that particular amount will be allowed as a deduction to the member under section 86 deduction. That is the concept. I know after doing a practical question, you'll be a little more, well versed with this concept. We will do 4 practical questions, 4 or 5 practical questions, and then you'll be able to really, understand this well. And we'll keep coming back to these provisions, guys. We'll keep coming back to these provisions. We'll keep referring to these provisions again and again. So rebate under section 86 is calculated by applying the following steps. What are the steps? The steps are: calculate the total income of the member including share from AOP and calculate the tax and cess of the member. So guys, total tax of the member divided by total income of the member. This will give us the average tax rate of the member, because member is the sufferer. Member has suffered double taxation. He has paid taxation as AOP. He has also paid taxation as his own capacity, which is the member. So he has suffered double taxation. So we'll first of all compute the average tax rate. Calculate the average rate of tax. That is, average rate of tax is equal to tax surcharge cess after rebate divide by total income multiplied by 100. This is multiplied by 100. This is the average tax rate. And then guys, we are going to multiply this average tax rate by the salary income or whatever has been given by AOP to the member, which has first been taxed in hands of the AOP by way of disallowance. Since it has been disallowed in hands of AOP BOI, it is taxed in hands of AOP BOI. So that amount will be multiplied with this average tax rate, and whatever will be the amount that will be provided as a relief to the member. It will be provided as a relief to the member. So rebate under section 86 is equal to share from AOP, which has been doubly taxed. One in hands of AOP, second in hands of member. This is the share of AOP which has been doubly taxed, multiplied by the average rate of tax. This is the rebate which will be allowed in hands of the members who's paying tax, once in form of AOP BOI, second in form in his own individual capacity. This is the rebate under section 86. So yes guys, this was the concept of AOP and BOI for all of you. Now let us start practical questions on this concept, and then yes, once you get the practical questions right, then guys please come back to the theory, read the theory again. You'll be able to better appreciate the theory once you have completed the practical questions of this particular concept. So let's start with the practical questions.